The Rebel Capitalist Show.
I know you've done a lot of work with the pension funds,
Mm-hmm.
and we all know they're underfunded.
Mm-hmm.
But where are we now in that story? You know, I just go back to these recent IPOs where I did a whiteboard video and I thought through, okay, well, you got the VC and they have these huge pools of money and there just flat out aren't enough profitable businesses to invest in. So what they have to do is they have to find a story company that has a great story. You get a salesman CEO and maybe a CFO that's willing to kind of cook the books or use some creative accounting. And then you take this vehicle public and you just keep dumping money into it to sell $20 bills for $10. But as long as it has a good story, then you have this huge IPO cash out with billions. And you know, one thing that I heard Schiff talk about, which I thought was interesting, you know, Microsoft in the late 80s, when it went public, number one, it was profitable. But number two, when they went public, they generated like 60 or 80 million dollars. Microsoft. And in inflation adjusted dollars, it would have been like 120 million. Where DoorDash, it just generated over 3 billion. And so it's just to pay these people off. But my point is it's the Fed lowering interest rates, pushing people further and further out the risk curve to get that yield. We talked about it earlier. I think the VCs are capitalizing on it. But how do the pension funds play into that mix?
So first, a note on the stock market. So after Tesla is added to the S&P 500 today, before Tesla, a buddy of mine, Philippa Dunn, does great work. She looked back at at Schiller's Cape Ratio, the 10-year price to earnings ratio on the S&P.
Yeah.
You can actually, Schiller has found a data set that is what the S&P 500 was before it truly existed. And so he's able to map it back to 1881.
Mm-hmm.
The K. Schiller. Since from 1881 to present day, the stock market valuation is in the 98th percentile. Post Tesla, Tesla alone is going to add 10% to the PE. Tesla alone to S&P's PE. So you'd be in the 99th percentile. And pensions have more exposure to the stock market than they've ever had. Right. And you've got quiet little headlines on Bloomberg about Steve Mnuchin looks as if he made sure that one of the private equity portfolio companies got some PPP financing. So you've got these private equity firms that are all in pensions. And don't forget the real estate private equity, they're all in pensions.
Right.
I mean, Jay Powell cannot, this country can't, you cannot have a stock market correction.
Yeah, right.
Because people don't realize, a good friend of mine, Chris Cole at Artemis Capital.
Yeah, right.
He's shown that in long cycles, looking back 100 years, that real estate and private equity are pro-cyclically correlated with public equities. Try on for size. And then you tell me how pensions are going to do.
For the average investor listening to this right now, it goes back to the release valve being the dollar. Is that what you're seeing long term?
Yes. I mean, look, if we're allowed to go from 2 or 3 trillion in the middle of a crisis to 7 or 10 trillion dollars of deficit spending in one fiscal year, we're going to have inflation. The dollar's going to get trashed.
Yeah.
The Fed will have to monetize the debt. They'll have no choice because nobody else is going to want the paper.
So that's really what people should be focusing on. It's the system as it is, or let's say as it's intended to be, with the Federal Reserve Act, and that the only thing they can do is we'll call it print bank reserves. If that system stays in place, then we've got a lot of deflationary pressure. But if they change that system through Janet Yellen, through merging the balance sheets, through MMT, whatever you want to call it, to basically they're now using those bank reserves as legal tender in the real economy, that's what everyone needs to pay attention to. And if we cross that Rubicon, then we're headed to the path of stagflation.
Basically. Because again, to your point, and to my summer in Venezuela, you cannot monetize your way to prosperity and to real economic growth. You can't do it.